and welcome back. You're watching Business AM on Metropole TV, and get talking to us on our SMS line 20146, and you're live across our social media platforms at Metropole TV KE, and also me on Twitter at Tabitha Muthoni G. And now we move on to sector trends, where COVID-19 has taken a huge toll on various sectors of the economy. The real estate sector has not been spared the brunt of the pandemic. Today, we discuss the effect that COVID-19 has had on this sector and how financial institutions can play a role in putting the sector back on the road to recovery. And joining me to navigate through this sector is Mr. John Thiongo, an author, entrepreneur with Next Level Properties. Good morning.
Good morning, Tabitha, and great to be here.
Great to have you.
Thank you very much.
Okay, now, John, let's start with the general state of the real estate sector. How are we looking?
Well, Tabitha, like many other sectors, right now the sector is not looking good. Definitely because of the impact of COVID-19 that has been quite significant on this sector. But if you trace that back, I think if you go all the way from 2017, because of the elections, the sector was already not doing very well. It's a very sensitive sector to politics and any other noise in the market. So right from 2017, we were not doing well. Going into 2018, we started seeing quite some good recovery in 2019. But you remember again in 2019, there was a liquidity crunch coming from the interest rate caps and among other things. But at least 2019 was a good year. We registered 5.3% growth in the sector compared to 4.1 in 2018. And so come 2020, we were all looking forward to better times, to better growth. And then boom, come COVID happened. And of course it threw all of us out of balance. And that is where we are, looking forward to COVID getting behind us so that the sector can get back to course.
So 5.3% in 2019, we were doing pretty well, and then COVID happens 2020. On a wider impact, let's break down how the pandemic has affected this sector from where you are coming from.
Well, the impact of COVID has shown in many ways. One is that there has been shorter working hours. Because a sector is defined by the labor force that it is able to attract. So during COVID, since March, this sector has suffered shorter working hours. Remember, there were restrictions in travel, there were restrictions in the number of hours that were available for work. And that reduced labor force have definitely slowed down the sector. But number two, there has been what we can call disrupted supply chain. Because this sector depends on a lot of SMEs, a lot of providers of raw materials to provide the raw materials that are needed in this sector. So that was disrupted. Indeed, a lot of SMEs that provide materials, an impulse to this sector had been disrupted. But number three is the whole impact of a lower demand for housing, because for a lot of people who buy into this sector in terms of houses, in terms of plots and land, most of them lost incomes, or most of them were sent in on unpaid leave. And therefore, when all that has happened, the impact has been reduced demand into this sector. And there could be many more other things. Remember, including building approvals, because we depend on building approvals. But here we are now, where you couldn't get these approvals timely. Sometimes you couldn't get them at all, because the county governments, most of them, their officers were not in the office. Including the land offices, you couldn't do search, you couldn't register properties. And so you can see the effect, the impact of COVID has been very severe. But right now we are starting to see normalcy returning, although slowly.
And also now, looking at the building approvals, you've had cases, scenarios where houses have been brought down, cases of them being built on a riverbank or something of the sort. What is your take on this, or probably what could have gone wrong?
Well, it is what happens when the players in a sector don't act in an integrated manner, are not reading sometimes from the same script. And I think a lot of these have to go back to government, because the authorities that approve all buildings sit in government, whether at the county level, whether at the national government. And I think when you see those things happening, it means there's someone who is not reading at the right script at that point, therefore leading to those gaps. And so the challenge here is for government agencies that are meant to check and confirm and give comfort and assurance that they're able to do it at the right time, they're able to do a thorough job. Because why would you build in a riparian area if the NEMA officer who was meant to clear have done their work properly? If the county government officer who was meant to give the approval had liaised with the water resources, NEMA and other agencies, because all that should happen in a coordinated manner.
Yeah, true.
And therefore we have seen losses in the sector which could have been avoided, so to speak. And I think this is a challenge for the sector in its entirety, to work in a coordinated manner.
Yeah.
Yes.
Yeah, and when we say coordination, from where you're sitting at, and also in your position, working with the Next Level Properties Limited,
Yes.
how have you been able to probably navigate through? Have you been in a scenario like that where maybe your client has bought property from you, or even you have sold property and then someone comes later, they say, you know, this land belongs to me, you do not follow the right procedure? What usually happens in that scenario? Because you have had the cases of Banda homes. People no longer own homes because when they purchased, the papers were legit, but 5 years down the line, and especially not during COVID, the house is no longer yours.
Yes. It's very unfortunate that these cases have continued to happen. I think one thing that needs to be enforced or to happen is that there need to be proper oversight of the sector. I think the sector itself, the private sector, has tried as much as we can to have internal mechanisms for oversight. But I think they still need for the government agencies, because the oversight authorities are in place, to be very strict, to be, the monitoring mechanisms need to be really enforced, so that then we don't have cases of buyers who are exposed to gaps like the ones that you've just talked about. So that need to be done timely. There is need for continuous monitoring. The work of National Construction Authority in terms of ensuring there is quality, provision of quality housing for buyers, for mortgage buyers, and other agencies, including the county government, that enforce the building code. And of course, the developers themselves, in ensuring there is reputation for their companies, delivering timely projects as promised. I think all that is very important. So all that coordinated space need to be in place. Yes.
And now, seeing into it that we do not have money, or things are on hold, how can financial or lending institutions play a role in helping grow the real estate sector?
Tabitha, I think the biggest challenge in this sector has been that of financing, because there has been a real financing gap.
That's huge.
You will be surprised to know that I think Kenya right now only have around 26,000 mortgages in place. And that is very small for a sector that boasts of around 675 billion shillings. So having only 26,000 mortgages is just a drop in the ocean. But why is this? The reason goes to the whole issue of affordability, of funding or finance, and availability. As I mentioned earlier, the whole of 2019 we were grappling with the whole issue of a liquidity crunch. And that meant that financial institutions, the banks, the SACCOs, the microfinances, didn't have sufficient capital to lend to mortgages, to borrowers for homes. But if you go back to the basic principles of this sector, globally, 90% of home ownership is mortgage based. So when you come to our ecosystem here in Kenya, where we are mainly a cash based economy, then you can see there are a lot of opportunities which are not being addressed. So the financial sector, including the lending institutions, have a lot of ground to cover. But as they do that, there is also need for the government to come in and support in terms of creating the right macro environment for them to be able to play their role. But in the specific case of COVID 2019, I know the government came in a bit earlier and put in place particular measures. The central bank lowering their base lending rate, the central bank lowering their cash reserve ratio for the banks, and basically this legroom that they got should basically help them to be able to make particular interventions for homeowners and borrowers. And this could include loan restructuring so that they give people more time. This could also include waiver on penalties and interest, because inevitably there will be additional or increased cases of default. I think with the legroom that the banks got, they should be able to extend that goodwill to the homeowners. And finally, suspended or delayed listing in the CLB, the Credit Reference Bureaus. And I think that was a big relief for Kenyans. And I believe banks have been able to tap into that and extend that relief to the borrowers.
Okay, great. And no, besides the government, the local funding solutions that we have, probably let's speak internationally. What other funding can this sector probably look into, get funds from so that we can grow?
Even before we go internationally, I am happy to state here that we have an emerging opportunity here in the Kenya Mortgage Refinancing Company, the KMRC. I think this is a new development in this space, which is exciting for Kenyans, because the whole purpose of KMRC, it was established in 2018, is to fill the gap by providing fixed rate financing to the primary providers of mortgages, being the banks, the microfinances and the SACCOs. Because our commercial banks have basically been lending on a floating rate, meaning depending on the interest rates that are there. And because home ownership and mortgages are long term, it then means that your finance costs will keep fluctuating depending on the rate that is there at place. So what KMRC does is then to come in and be able to lend to the banks on a fixed rate, which is gives a lot of pacifies the sector. And I understand that KMRC have already received the first funding from Treasury, around 2 billion last year. And have been able to raise sovereign funds amounting to around 35 billion so far, and are on course to go to the capital markets through a board, perhaps in another 1 or 2 years, so that they can raise around a total of 50 billion. I think that would be a significant injection to the sector to be able to assure reliable, affordable funding. So I think that's a very exciting development in the sector. But number two, talking about internationally, is our own diaspora. I think diaspora funding has been underestimated. The good thing about diaspora funding is that our diaspora constituency, a lot of the funding that they send back home comes to this sector. And I think that's an opportunity. It needs to be encouraged. It needs to be promoted. Government need to put more incentives to grow this diaspora funding. But number three, in terms of alternative funding, is the whole aspect of pension funds. I think Kenya holds a lot of money in pension funds, the NSSFs and others. And I think we just need to find a way of unlocking this and releasing it to this sector so that the employees are able to access their funds early, perhaps to put it up as deposits for homes. And going back to international arena, there are definitely partners like World Bank and others who have interest in this sector, who are able to give discounted funding or debt for this sector, perhaps through the national government. Yes, so there are many options.
Yeah, so many options available, and
True.
well put. You have put that out very well. Now, looking at our recovery strategy.
Yes.
How does this sector recover from the pandemic?
Wow, it will be quite a long, winding path, so to speak.
Yeah.
But we will get there. It is Robin Sharma who said that change is always confused at the start. It's messy in the middle, but it is gorgeous at the end.
Wow.
So we are looking at the gorgeous part, and it will come, perhaps in the middle to the long term. But what I can say in terms of our route to recovery, number one, the sector definitely will not remain the same as it was. So number one is that we have to aim for efficiency in this sector. What do I mean? What I mean is that we have to look at our cost of building. All the way from the cost of land, the cost of building and building materials, and of course taking advantage of affordable labor, which I think is a plus for Kenya, because we have affordable labor.
Yes.
So looking at all that, we have to aim at unlocking all efficiencies possible within this sector, so that we are able to deliver value for money to our clients. But number two is that the new normal will have to have a component of health and safety in the building sector and in the real sector at a whole. So that we have to adopt SOPs that have been developed by regulators like National Construction Authority and other agencies. We have to adopt those SOPs to ensure that all the homes that are delivered, all the products in this market are compliant in terms of health and safety, both for those who are building and also those who will be occupants, the end users. But number three is the government itself. I think the government will have to come in and find a way of putting measures, substantive measures, to curb the potential loss of employment and also the potential defaults that would come if nothing is done. So I think government would have to come in there. But more specifically, another thing that I see is that we will have to be more innovative. For example, we have always heard about serviced apartment in the residential sector. But in this case now, we need to go beyond that and perhaps even bring that concept into the office sector, where we have serviced office spaces, so that our SMEs, our small offices, can just be able to have spaces that are fully furnished. You just come in, plug and play. So we need to introduce such innovative ideas into the sector. And finally, and I know we can talk about much more, is to embrace e-commerce, leverage on IT in this sector. So that, for example, it will be difficult to keep to have physical visits, a lot of them, as it was before. So what about bringing in fashion tours to show houses, to show properties? What about online listing? I think those are things that will be with us into the long haul. So the whole thing about Internet of Things is here with us in this sector. We have been thrust forward like 5 years ahead, and we just have to embrace this and learn with it.
Technology.
Technology.
Yes. So probably a word of advice for someone who is in the real estate sector and for someone who is looking to venture into the sector.
All is not trust. While we might be looking like we are in the middle of a crisis, but the good thing with this sector is that it has a way of catching up. In the long run, this sector is still a sector that is bankable. This sector still have big opportunities. The opportunities right now for those people who have a bit of liquidity, buy now and wait, because better times are coming. For those who can't, hold what you have, because we are nowhere near a bubble burst. Because we still have a lot of gaps and people to settle into homes. So the opportunities, the future looks good into the middle and long term. Yes.
Great. Buy now and wait or hold on. Yeah.
Exactly.
So besides being an entrepreneur, you are also an author.
Yes.
Tell us a little bit about your book, Becoming a Maverick, and why that title, Maverick?
Wow. Yes, Becoming Maverick is a new book release that I have done during COVID. And this book, Becoming Maverick, is a must read for anyone who is looking at becoming distinctive and succeeding area in business and career. Actually, that's the subtitle to the book.
Succeeding earlier in business and career.
Yes, succeeding area. The whole aspect of succeeding area and becoming distinctive in what you do. So I address myself mainly to entrepreneurs. I address myself to career people who want to climb their mountain of influence and be the superstars. And basically what I argue in that book is that we must work at becoming the hunter, not the hunted.
Wow.
You want to be right in front of your game.
Yeah.
And that is what is basically in the book. It's an exciting book, and I want to encourage everyone who can get hold of it to go to amazon.com and just Google Becoming Maverick by John Thiongo, and you'll be able to get your copy, or you can contact us and we are able to get a copy to you.
Wow, awesome. Yes. Become a hunter, not the hunted.
Exactly.
Thank you. There you have it, Mr. John Thiongo, an author and entrepreneur with Next Level Properties Limited. We take a short break. When we come back, the economic review.